Tonight, pressure mounts on government to arrest free fall of the cedi as traders union label it a crisis that has left their businesses in a mess.
Today, wake up in the morning, the dollar is 14.2, the next moment is 14.6, the next moment is 14.8.
The dollar is used to benchmark everything, even the payment of duties and all that. So naturally, if your cost of doing business go up, you have to also up your prices so that you can at least break even.
We have exclusive details on the desperate measures government is taking tonight to stop the slide.
This is Top Story with Evans Mensah.
The cedi is once again in a free fall, and tonight the traders union GUTA have already labeled it a crisis they claim has left their businesses in a mess. Today at forest bureaus across the country, $1 will get you as much as 14 cedis, 80 pesos. We are learning of desperate measures by government in an attempt to arrest the free fall. Well, tonight, GUTA has a statement out. Kojo Brace is in the studio with details of that. Kojo, why is GUTA labeling this a crisis?
Well, they are looking at the impact that this is having on their businesses. They say that the inflationary pressures resulting from the depreciation cedi have pushed the cost of goods through the roof, making it increasingly difficult for businesses to stay afloat. They again say that the purchasing power of the consuming public has also been affected, thereby reducing the turnover of businesses. Now, they are also talking about loans because they do their businesses with loans, and they're saying the repayment of loans to the bank has become extremely difficult. And then they talk about, the charges they incur in importing. They say that the rising freight charges compounded by customs duties benchmarked in dollars at the port are crippling trade and commerce, leading to the untold hardships for businesses and consumers alike. And they again say that it has increased unpredictability of forecast.
So they can plan.
Businesses, they cannot, because in the past you could say that if I bring in maybe 10,000 worth of these goods, I could get this, but now they can't because the cedi keeps depreciating. They are saying that the value of credit purchase increases, thereby making it very difficult for traders to repay the goods bought from their overseas suppliers, leading to higher indebtedness to businesses. So when you import, you think that you're importing maybe $10,000 worth of goods, but by the time it gets here, look at how much you've lost. And that's why they are saying that businesses are really reeling under this depreciating.
So that's good to there. We're also hearing tonight from the spare parts dealers. We're also hearing from the Food and Beverages Association. We're hearing from GUTA. We're hearing from the AGI and the Chamber of Commerce. Everybody who has some business to do in this country beginning to complain about what we're seeing. I want to bring in my colleague Kofi J with the Reset Desk as we begin to understand what really is happening tonight. And Kofi, just when we checked before we came on air with the forest bureaus, you can get $1 for 14 cedis, 80 pesos.
Yeah.
What has been the rate of depreciation over the period?
Well, Evans, we began the year with $1 to 11 cedis, 98 pesos, and we've been monitoring this for a long time. And currently, just like you said, 14 cedis, 80 pesos will get you $1. And so if you do the math, that will give you a depreciation of 19.85 percent. That's approximately 20%. So since the beginning of the year, the cedi has depreciated or has lost about 20% of its value.
Okay, and that's the challenge that government is having to deal with. We'll talk about the IMF program and what that means for this current trend of depreciation. But a few things we're learning tonight about an attempt to try and deal with this. Now, government's challenge right now is finding the resources to buy what we need to run. And as you know, almost everything is bought with dollars now. Government also has to do the same. In fact, the energy you need to power your vehicles, the fuel, is costing government some $400 million a month just to find the dollars for the BDCs to make the purchases. The challenges we have currently now, a refinery that is now also importing crude to refine in this country. That has added on an additional burden. I understand that Cabinet has given the directive now for the Central Refinery to be brought under the gold for oil arrangement. They are calling it now the gold for crude arrangement. So that also can help lessen the pressure that the city is currently under. That is a conversation that they're having. But there's also an IMF part of this, which is proving to become one of the biggest headaches of the government, which is under the IMF program, there are strict limitations on the support that the BOG can provide to the market, to the Ghanaian market, in terms of the availability of dollars. What are we learning?
Well, Eva, let's put this in context. Now, the IMF program usually protects your reserves and then also helps you to fund your balance of payment, bills. Now, we know that when you have issues with your balance of payment, that's when you fall on your reserve and your reserve keep depleting. IMF doesn't want that to happen. That's why they are supporting us with a balance of payment of $3 billion in 3 years. Now, this is what is contained in the IMF program, black and white. They say this is what government is telling the IMF how they are going to, protect the reserves of the country. They say we are committed to a greater exchange rate flexibility to enhance resilience and shocks and help rebuild a central bank reserve. We will gradually limit our forex interventions to avoid excess exchange rate volatility and adhere to the gross forex interventions budget consistent with the achievement with our reserve target. They say, in particular, we are firmly committed to limiting monthly gross forex sales to a ceiling. And in case of any need for higher interventions, we will consult the IMF staff on the appropriate policy, response. And that's according to what the government is telling the IMF in the IMF program, Evans.
In other words, government prior to this particular arrangement would have secured some help from the BOG in terms of the release of dollars into the system to help show up the city. But they've already made an arrangement and gone to the IMF and made commitments that they're going to limit the extent to which they do that. Now, I'm also learning tonight from government sources that specifically since this proposal was put before the IMF and was agreed upon, there is a cap now that's been placed on what the BOG can do.
And in fact, it's stated in here, they say in particular, quote, in particular, we will firmly be committed to limit monthly gross forex sales to a ceiling. So the same thing, a cap. There's a ceiling that has been placed on how BOG can come in to do forex auctioning.
And that is important. And again, my cabinet sources tell me that the cap is currently around $60 to $80 million a month. And that is significantly understating what we require to
woefully
function
inadequate
as a country. Just mentioning the import of refined petroleum products alone in the region of some $400 million a month. That clearly is a mighty drop in that ocean, that cap that has been placed on. I understand that the finance minister has been tasked to go back to the IMF and attempt some form of a renegotiation of the commitments that we made to the fund, that we're going to place a limit, considering where we are right now. But there's also government's desire to use the gold for oil mechanism to also, attempt to try and save the city.
Yeah, and in fact, the IMF says that, government is telling the IMF, they say, quote, we will follow best practices in our plan to purchase gold from local miners to avoid distortion. To improve the quality of reserve statistics, we will adopt the latest IMF reserve reports template with the support of the IMF statistics experts. So they are going to continue with the gold for oil deal that they feel will help the city to stabilize.
And government sources tell us tonight that the gold for oil is still working, still accounting for some 40% of the market. And that if we did not have the gold for oil policy in place, the depreciation we've witnessed that GUTA, the Food and Beverages Association, and everybody's complaining about tonight will be far worse than it is right now. So clearly there's the roadmap towards getting this resolved isn't clear just yet. And you want to join us on PM Express tonight. We're going to be unpacking this a bit more for you, understanding what is happening with the city and what the roadmap looks like. I want to bring in some of the stakeholders, the business community. They've been feeling the pinch quite hard. I talked about GUTA. I want to bring in right now John Awuni. He's executive chairman of the Food and Beverages Association. He joins us on the line right now. John, thanks for your time here on Top Story. What's the experience for you in the last few weeks when we've seen this significant fall of the cedi?
Generally, it's a massive disaster. It's a massive disaster. It's a massive disaster because we see the working capital of most of the businesses being eroded. Generally, the demand for goods have generally been very low already, and with the depreciation of the currency, you realize that clearly it's a double blow that we are receiving. And so most of the businesses I've spoken to, some of them have really stopped even selling because they don't even know how to price it. Ghana is generally a credit market. They receive supply from abroad on credit, and then they give to the Ghanaian distributors or wholesalers and retailers on credit. And you give it to them at a certain exchange rate in mind. And by the time that you realize they are about to pay or they haven't even sold the goods yet, the exchange rate has changed. Most of the goods in the Ghanaian market were given out about 12 cedis to 12.5 cedis. Now we are dealing with almost 15 cedis to $1. So it's a major disaster, and people are panicking because it is not just a joke. By the time they pay you the money for you to buy the dollar and pay back to your suppliers, you are in serious trouble. So it's a major issue to the.
But your members, are they not already stocked up?
Are they not
already stocked up?
They are stocked up, but if you stock up, the goods are on credit. We're giving to you on credit. And you have also given to the wholesaler distributors on credit, or you have produced on credit and you are sending it out to the market on credit. When they pay you, you are going to now change it into dollars and pay the people who send the goods to you from abroad. So if they gave it to you for 1 month, and you are expecting their money back within the month, they don't expect any storage from you. So generally, even though the goods are stocked up, they are on credit basis. And they came in at a certain exchange rate with the expectation that by the time you are paying them, it will be another exchange rate. But clearly, we have lost focus. We don't know how to plan. Nobody can predict, and it's a major disaster.
So have you increased prices, foods and beverages?
Clearly, prices are going up. Some of them have stopped selling. Some of them have been able to put the prices up. And they have put the prices up with a certain dollar exchange rate in mind, which can be more or which can be less or whatever, because now it has to do with speculation. It speculates that maybe the dollar, some of the foods could be priced at 20 cedis to $1 so that they don't lose. Some of them depend on the individuals in question.
Stay with me. That's John Awuni. There is Executive Chairman of the Food and Beverages Association. Joining me right now is the Traders Union's Director of Communications. That's Guta, Joseph Paddy. Joseph, thanks for your time here on Top Story. In your statement, you describe this as a crisis. Isn't that an exaggeration, considering that from what we check, it's just been some 20% depreciation since January? Hello, Joseph.
Hello, yeah.
Yes, you call this a crisis.
Yeah, exactly so. It is a crisis for both the business community and then the consuming public. It's a crisis in a sense that you cannot plan, you cannot do projection. A consumer plans to come and buy a commodity. He has come for invoice about 2 weeks ago. He comes and the price is changed. It's a worrying situation. So, and as a businessman, you cannot plan for your business. Then your business is going to die off. So this is a worrying situation. That's why we're asking, what is the real cause of this free fall of the cedi against the major currencies? Let's appreciate and know what is the cause. Then, after identifying the causes, what are the measures government is putting in place to mitigate that? Because businesses are bleeding, to be sincere with you, businesses are bleeding to death. Because most of them are losing their capital. Some of them, the goods are bought on credit. You give a credit line for about 30 days credit line. And then before you could say, before you get the money, the cedi has fallen so much that you need more cedis to get those same fewer dollars. So it's a crisis that the business community is managing now. And if we are not careful, most business will run out of business.
But this is not new, is it? I mean, goods are usually used to depreciation of the cedi. It's something that happens perennially. It's very constant. It's very regular. What's different about this depreciation? Why you're calling it a crisis?
The rate of depreciation is our concern now. The rate of depreciation. Just imagine this is the shortest possible time. Beginning of the year, the dollar has appreciated against the cedi also about 20%, and it's worrying. We didn't see it unlike before, but now the trend at which it's going. You get up in the morning. As of just last week, the dollar was 14.2. Today, as I'm talking to you, it's 14.8. So the same commodity product you imported with the same amount, now you go to the port, you're going to pay more duties because of the exchange rate. Because when they use the exchange rate to calculate duty for it, already we are struggling with interest rates in the country. This is extremely high. Coupled with that, coming to this exchange rate, so businesses are really bleeding.
I mean, Jonah, when you call it a catastrophe, is this the worst you've seen? Hello, John. Hello, John Awuni. Okay, let me put that question to you, Joseph Paddy. Is this the worst you've seen?
Yeah, as it stands now. But like I said already, like I said earlier on, we are already struggling with the interest rate. That is about 35 to 40%. That businesses are struggling with. And now we've come to add on to this. The exchange rate has also moved to about 14.8. And we've been complaining about the cost of doing business being extremely high. So with this exchange rate fluctuation, it's making cost of business extremely, extremely high. And then the consuming public, their purchasing power is still where it is. Evans, I don't know the last time your salary was increased, maybe yesterday, so that you can. So, but you can plan as a consumer, because you come to the market today, tomorrow you come to buy the same product, the same commodity line, and the price has changed. And then you have to go back home and go and organize yourself and top up. Before you come back, the price has changed. So it's worrying. As much as business community is struggling, the consuming public are also suffering because they cannot afford. What is the point where there's a demand for the product, but affordability is a challenge? So as much as we are complaining as a business community, we are also fighting for the consuming public. What can be done to mitigate their struggle and their fight? Because there are certain essential commodities that you cannot avoid them, like medicine, whatever company you need to buy it. But when you go and like we heard this morning that they are even going to increase some services at the clinic and the hospitals, So these are the worrying conditions that Ghanaians face. The increase is going to come as a result of importation of these consumables, the hospital products. So it's a major concern for all Ghanaians that we need to, as a matter of urgency, work on it and do something. The government must come out with a program, a policy. We want to hear from Central Bank, what are they doing to mitigate this situation we find ourselves?
I mean, John Awuni, what are your options at the Food and Beverages Association now?
The option clearly is to adjust prices up and speculate what the dollar will be in the next couple of weeks, and then adjust the prices up and pass everything down to the Ghanaian consumer.
So what rate of increase are we going to see in prices?
Well, like I said earlier, it depends on the individual companies. It depends, because right now, nobody really knows how much, what the exchange rate will be next week or next 2 weeks or by the end of June. So some may speculate that, well, it could be 18 cities. Some could say it could be 20 cities and thereabout. So it's difficult to tell you that, because it's not like one company. You are dealing with different people, and it has to do with whatever permutations they put in place or they consider before they can come out with their prices. So definitely, we are dealing with 15 cities now. The prices in the market may generally be, maybe some will say 18 cities, some will say 20 cities, some whatever.
John Awuni, thank you very much. He is Executive Chairman of the Food and Beverages Association. Joseph Paddy is the Director of Communications at GUTA, the Traders Union. Dr. Benjamin Amma joins me right now. He is a Senior Lecturer at the Department of Finance at the University of Ghana Business School. Dr. Amma, thanks for your time here on Top Story. What do you put this down to?
Thank you very much. The concerns of the importers basically falls under translation risk exposure, where they import the items, they are invoiced in dollars, and they receive the items, they don't sell it immediately. By the time they have to pay back their suppliers, then they will need more Ghana cedis to buy the dollars. The same dollars starting on, they assume in the credit position, they now need more Ghana cedis to buy that same amount of dollars. That is eating away and eroding their capital. And for them, because they are businessmen and businesswomen, they also want to be in business. So what they will do then, like you rightly said, is to increase the price. And increasing the price is in anticipation based on their predictive ability what the dollar will be, so that they will also cover themselves so they don't only assume the exchange rate risk exposure. In the end, it is the final consumer, you and I, who will have to pay for the increases in price because these businessmen want to maintain their capital and still want to be in business. So it's just a matter of translation exposure that they are trying to manage in this particular situation because they are invoiced in a foreign currency and not in the local currency.
Yeah, but why is the cedi in a free fall?
Why the cedi is in a free fall? Like rightly said from the beginning, we are under a fund program, and those days when BOG will come in to assist, now we are seeing that there's some level of restrictions because of what the government itself has committed to do. And so it's becoming difficult for BOG now to come out or on its own renege on that commitment that was made as part of the fund agreement to IMF. So that is one challenge that I believe the government is having now. But rightly so, like you said, and if I heard you right, said the minister has been tasked to go back to the Minister of Finance to rearrange and see if they can have some relief and that particular provision.
On that point, though, knowing what you know of the IMF, what are the chances that they succeed in getting the IMF to back down, considering that this is, in essence, what we propose to do in the program?
Absolutely. But then again, we did promise to do that. But if the reality is becoming too much for us, I think we don't have to be shy about it. We still have to go to the fund and then explain. And seriously, the fund has an interest in Ghana. So when we explain and they look at the situation, look at what is happening, I believe strongly that because the fund itself, IMF, tries to look at how to protect the vulnerable and the poor, definitely if the effect of these exchange rate risk is affecting the poor and the vulnerable the most, I strongly believe that the fund will have to relook at it and then give some relief. What BOD can also do in the interim is to come out with some form of communication to reassure the market that they are doing something about what the current situation is. So that at least the market will be assured. What the market needs is dollars. But at least don't leave the market on the quiet like that. If there are some things that are doing behind the scenes, it will be good if BOD comes out to communicate to the public so the public can also at least observe and then follow through with Bank of Ghana what exactly they are doing in their attempt to deal with the situation in the short term than to leave the market itself to grapple around and to seek for solutions which will not help, but to just be speculative solutions that will lead to increased depreciation of the Ghana cedi.
And I want to quote you a famous saying on this matter, that if the fundamentals are weak, the exchange rate will expose you. Are the fundamentals weak? Is that fundamentally what this comes down to?
Even that is absolutely true. The fundamentals are definitely weak. We shouldn't just, play jokes about it. The truth is that the fundamentals are very weak. What is the fundamentals there? What is the inflation rate as we speak now? And what has been the inflation rate over time? Very high. What is interest rate? That is a fundamental factor. It is very high. What is unemployment rate now? Unemployment rate is very high. What is our balance of payment position? It is very high. And these are the very fundamentals that is used in assessing the exchange rate risk.
It's interesting. It's interesting you mention the our external position and fundamentally we went to the IMF for balance of payment support. So it's curious, is it not, that while we are at the IMF for balance of payments, or you mentioned that as one of the fundamentals, we have in this crisis.
You see, the factors that I was talking about, inflation, interest rate, balance of payment, unemployment, it is not just solving one that gives you a complete hold. It's about how you are going to manage this set of factors. So if you even succeed in having control over one of them, what about the other factors that are not under control? It becomes a problem. They become pulling factors that will pull and basically erode the benefits you will be having having succeeded in putting one under control. So it is how the factors interplay. And as we speak now, the fundamentals are really, really weak. No wonder we are seeing this level of exchange rates that we have now.
Also joining me is Courage Boti. He's an economist. He's also been following this pretty closely. And Courage, you watch what is happening. And one of the unions who joined me, the Food and Beverages Association, they said they have no option than to speculate. And fundamentally, they don't expect that this will ease any time soon. But speculation is exactly what you're warned against when you're having such a free fall. You must stop at some point. What's your best guess how to stem this tide to avert further slide?
Well, good evening to you and your listeners. It's a difficult situation. It's more or less a free fall at this point in time. But just probably taking on from where the last speaker ended. Yes, fundamentals may be weak, but let's look at it this way. Compared to start of the year, compared to mid last year, and then, of course, towards the end of the year, there were all these fundamentals. Reserve IMF projected should end 2023 at just about 1.1 months of import cover. We ended with 1.7, ahead of target. Where is it currently versus target? It is still ahead of target. Inflation may have fetched to 25.8%, but that was largely a temporal something, a transitory something, and we've seen a correction underway. Growth is ahead of schedule. So if it's about unemployment, yes, unemployment is high, but with the hope of recovery, as we've seen so far, the first year under the program and going forward, you could clearly see that things are correcting, even if at a slower pace. So fundamentals are weak here, but relative to what they were in 2023, 2022, we are in an improving situation. So ordinarily, if it's about reaction to the fundamentals, maybe we shouldn't be seeing the levels of depreciation we are seeing now, the reactions we are seeing. So probably there is more to it than just the conversation we're having now.
And very briefly,
speculating.
Yes.
In my view, they are speculating because one, the sources. When you speak to the traders, the sources are coming from corporate demand. The Bank of Ghana themselves hinted at the last MPC that they have had to settle a lot of FX demand to settle IPPs, obligations and all that. We've seen the IPPs again on the market with a lot of demand. We are in quarter two, seasonality effect, where multinationals who are repatriating dividends and all that will have exerted some pressure. But what were the sources of FX previously? It was largely from portfolio investment inflows into Ghana, FDI inflows, and then from trade receipts and interventions from the Bank of Ghana. Currently, portfolio inflows are almost non-existent. FDIs do come in, but at what rate? We've seen also, if you like, our brothers and sisters in outside Ghana also flowing in with some flows and all that. But the main source of supply, as it appears now, is Bank of Ghana's forward interventions and spot market interventions. And we are not there yet, so they cannot deplete their reserves at the pace one would expect to supply the needs of the market.
And very quickly, do you see any short-term fixes here?
Well, I mean, the short-term fixes, I don't think there is what they will do, and I'm looking forward to the coming MPC meeting, what interventions will come up. But on top of my head, the gold for reserve policy has been good in building reserve, but probably not good for the market. Because those gold proceeds, which would have come through the commercial banking system and provide liquidity where the banks can provide that liquidity on the market to stabilize things, are all going to the Bank of Ghana more or less at this moment, right? And so, as the Bank of Ghana decides to auction, we do not have enough on the market. Can we relook at that where commercial banks receive those proceeds? Probably say the same gold for reserve, but this time round, let it sit with the commercial bank and they can use it for their normal FX trading. Can we reassure the market about how we are making progress with the program and how things are correcting. And in the meantime, we know our election year history. People are reacting to that. And every election since when this Fourth Republic has seen some overrun, except 2004. But the stakes are much higher, and we need to do things different now.
Okay. Thank you very much, Courage Boutique there. You also heard earlier John Awuni is Executive Chairman of the Food and Beverages Association. I want to hear from you, your own experience with the city. As we've been talking about tonight, it's hit 14 cedis, 80 pesos. And News Night starts right now.